Hi everybody, welcome back to Basics, where my fiance Michael is teaching me how to trade. Today it looks like we're going to be doing a test on all the fundamental stuff that we just went over in the last couple episodes. It very well may turn into a little bit of a review because I am a little bit rusty on the info. If you're just joining us, we have a playlist from way back in the beginning when we first started with what is a stock. So if this is your first time here, give a click back to the beginning and follow along.
Thought you were studying every day. What do you mean it's going to be a review? So here's our socials. Again, follow us and give us likes and retweet us things and send me things, money in particular. Yeah, so we did 3 lessons on fundamentals, and that's about it. We talked heavily about how fundamental analysis was not a trading plan. It was not to tell you what to do, but it was to almost tell you what to avoid and things like liquidity and important bits like this. So the reason that it's just 1, 2, 3 and then a test is because that's kind of all I want to do. But the information is really important. So I'm glad you've been studying and you're going to get all this. Again, it's just more of you'll learn the fundamental stuff as you go, but I just wanted to make sure that you had a basics knowledge going into it. And then next we're going to go into statistical, and then it will be risk management, and then you'll be trading a $10 million account.
Unsupervised.
So again, it's a lot. With the other ones, it was easier to structure a test because there was more right or wrong answers. This, it's going to be a lot of
wrong answers.
Well, no, it's just I listed, I think, 3 or 4 on the next page, but there could be hundreds of both pros and cons. So it's going to be harder to get this wrong, which I guess I shouldn't have said, because now if you get it wrong, you look even worse, but that's fine. So what are the pros and cons of fundamental analysis? Spoiler alert, I already gave you one of the biggest cons already in my ramblings today. 2 seconds ago, but there you go. Go ahead. Just start with a pro. What is a benefit of fundamental analysis?
I don't know.
Or skip over the pros and tell me some cons of fundamental analysis, and I'll give you half marks if you get a couple.
I don't have any of those either, even though you just said it.
So you're giving up on this one?
Yeah.
All right, so I copied this over from the first lesson. Just copied and paste. Right, so pros, again, we talked about this a lot. It's very good at telling us where risk can come from, right? If you're short a pharmaceutical company that's working on a COVID treatment, that's obviously a massive risk, right? They could come out tomorrow and say, yeah, we fixed it, right? It tells us what sectors are doing well. When if you go in and you look at a company and you say, oh, this is part of the weed sector, and there was, right, at first it was Bitcoin, and then it was weed, and now it's pharmaceutical, or now it's work from home type stuff like Zoom. But every sector has a time where people really care about it and it's hot at that time. That's another good one. And then whether it's a real company, whether the company exists. And this is all nice recap for you. And then the cons, and this is what I talked about. It's not a full trading plan, right? That's the main thing. So that's a 0 out of that question was worth 1,000 points.
The rest of them are all worth 1.
So what does this histogram represent? First of all, what's a histogram? Do you know what a histogram is?
A graph that dictates history. Oh.
All right. So what does this histogram represent? It's like a bar.
The float
chart.
No? Okay.
It's on the bottom of all the charts we've looked at so far.
I remember you telling me that. I remember talking about this just the other day.
Right. This was in 3.
I thought it was the float, but it's not the float.
You got an account. You got a sim trader all set up. This is volume. So each of these, so say the chart above it was a daily chart. Then each of these bars would be the amount of volume, which is the amount
being traded
yes. each day.
Right.
So how is that different from float?
The float is how many shares they have to trade.
Define float.
I just did. It's the amount of shares they have to trade.
Who's they?
The stock. The company.
Yes.
The
now,
company.
a more appropriate wording would be it's the amount of shares outstanding, right? So it's the amount of shares that exist in the world. You're right. It's just a cleaner explanation just to say the shares that are that exist in the world to be traded.
That histogram was volume.
You're right.
What does that do again?
So that's the amount of shares. So, for example, I forget where this is from, but this last day that says 4.75 million, that means there was 4.75 million shares traded or exchanged hands that day.
Okay.
So these two are kind of related because remember we talked about low float and high float stocks. So a stock, so say this company only had 20 million shares in its float. Well, that means a quarter of the company changed hands that day. That might be very significant. Now, I doubt that, again, I don't know what this company is. I doubt whatever this company is has that. They're related, but they're not the same thing, right? You can have a really high float company that doesn't trade very much or a really low float company that trades a lot.
Okay.
Type of thing.
And then we did float.
So that's float. So again, shares outstanding. All right, shares available to trade could mean a bunch of things. Every share is technically available to trade.
Okay.
Say Zuckerberg owns half of Facebook. You could define that in the float, but I wouldn't recommend it because you're not getting his shares. So he's not part of the equation.
Okay.
So generally what happens after a share offering? So maybe first we'll go into what is a share offering.
It's when a company offers shares to the people in the company.
No.
Wait.
You're close.
When they say, we're gonna
you looking at me for?
Give you more shares.
No. I think are you thinking about stock splits?
Maybe, yeah.
Where they split the shares out?
Yes, that's what I'm thinking about.
Remember, a share offering was the thing that really pissed people off.
I don't remember. Recap. We're turning this into a recap.
Editing. So a share offering has covered in fundamentals too. You should watch your own videos back. But basically what happens, we talked about a shitty company that like triples in price for some reason. And the two ways a company can raise money is one, go get debt from the bank. The other is to offer more shares, right? But we talked about how that would piss people off because all of a sudden, if I own 1,000 shares of this company, maybe that represents 1% of the value of the company. If they issue a bunch more shares, which means that people can just go and buy them to give money to the company, it means my ownership of the company shrunk.
Okay.
Right? So what happens generally after a share offering is a big crash because what happens is the company spikes and then they go, great, I don't know why we've tripled. Maybe we showed up on some guy's chat room or message board or whatever, but let's use this opportunity while our share price is high to bring in more money for the company by issuing more shares. But it's a supply and demand thing. If you increase the demand dramatically, the price of the thing falls.
It decreases, yes.
Right? Payouts from the company.
Dividends.
Ah, there you go. That's one for...
I know I have float, too.
You got float. I'll give you 50% on this one then. But
Why?
yeah.
Why did I only get...
No, on the whole thing. This is the last question.
Oh, seriously?
Yeah.
Oh, okay.
Figured, again, it's not... I want you to know these things, but I don't want you to focus on these things.
Okay.
Right? I want you to know of their existence, but I just don't want you to, right? You should know that this company pays dividends. And that what that means is that if you own the shares on the dividend date, that you'll get paid money. And that what generally happens to the price around the time of a dividend?
It goes...
Wait, so first of all, what would happen if the price didn't move? What kind of... So say on Friday the stock's trading at $10 and you could buy it, and then on Monday they pay you $1 a share.
It goes up. It goes down.
So generally what happens, so think about it. So stock closes Friday at 10. Anyone who owns the stock at Friday, when it closes, gets $1 per share.
Okay.
Right? So if it opened the next day at 10, you could buy it Friday on the close, sell it Monday on the open, and make $1
Okay.
for free.
Right.
But since
and you said that normally negates itself.
right, because the market, there is no free money in the market, right? So what you can buy it, and in theory, it can pay a dividend and go up, but it would only do that if there was some news. If you took out all news and all markets, what would happen is that stock would drop $1 to compensate for the dollar that's being paid, roughly. All right, so that's it. You made it, I guess, roughly.
Good little recap.
But yeah, that's going to be it for fundamental. Again, I want you to know these things. What we're actually going to do next episode, which for us is in 5 seconds from now, is I'm going to open up and we're going to scan through for about 10-15 minutes of different companies, and every single one I'm going to go through the single stock window and I'm going to show you all of these. Probably makes sense looking back that we did that at a different order, because it probably would have set you up better for the test, but we know that for next time. We're learning too here, people. But okay, guys, so again, if you're seeing this on my channel, the next episode is up on Jessica's. If you're seeing it on Jessica's, then you just got to wait a couple days and the next episode will be up there as well. So any questions?
No.
All right, see you guys.